Good day, ladies and gentlemen, and welcome to the show this Thursday, December 1st, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's what I want to say is, I'm going to get started. I'm going to open up the charts right here. It says, if history is any indication, the central bank will go back to rate cuts and quantitative easing to rescue the economy. And it's inflation be damned. They're going to do it. Well, we're getting almost to that point. We can see the handwriting on the wall. They're looking for a soft pivot. They're looking to get out of the situation that they find themselves in. And it says even if the Fed continues to hike rates, it'll never catch up to the inflation curve. They're miles behind. Now this is Peter Schiff saying this. It says, because I've been saying the only real way to fight inflation is a two-pronged attack, which would include positive real interest rates, and we need cooperation from the U.S. government. We need to see cuts in government spending. Something that's not going to happen. In fact, government spending is going to continue to increase, so we'll have the deficits that are making that spending possible. So huge deficits. The continued growth of the debt of the country, which leads to a point where they can't afford to raise rates higher. Right now, they can still raise rates a little bit, but just wait. Wait until the debt doubles. Wait until it's up to $60 trillion. The interest payments on the debt will not allow them to raise rates any. In fact, they have to keep rates down closer to zero. In fact, we're looking at something common called NIRP, N-I-R-P. We've had zero interest rate policy, ZIRP. We've had that already. We've tried that out, see how it works. But we haven't had NIRP, negative interest rate policy. They have to prepare the system for that. They have to pave the way. This is what central bank digital currency is about. It's paving the way for NIRP. Also, within the banking system, they have to put laws in place where you can't withdraw your money any longer, because how do you withdraw your money from the bank? Well, people go in, they say, hey, I want my money. And the bank says, okay, I'll give you a certain percentage. They have to give it to you in bills. That's cash. You can't withdraw your money if there's no such thing as cash anymore. If cash is gone. And so, see, that's where central bank digital currency comes in. They've already got it, but it starts slow. And this is how government always does everything to us. To us. You hear the word I use, they do things to us. They start slow. They might put some little tax in. You hardly even notice it at first, but once they get it grandfathered in and they get it firmly entrenched, then they raise that tax higher and higher and higher until it just crushes the people. Take the income tax, for instance. They got to get it in slowly. They put things in slowly and get us to accept it. So this way is central bank digital currency right now. They're slowly implementing it, getting us to accept it so that they can put the clampers on all of us. And they've been doing this for a while now. They've been destroying the middle class. And you hear that said out there. You hear everybody saying, oh, they're destroying the middle class. What is that all about? The destruction of the middle class. Well, what they're doing is they're creating a two-tiered system. You got utter poverty, people that are supported by the system, and then you've got the very rich at the top who are benefiting from everything that the lower classes are doing. And it's a feudal type system. It's a system like existed in the Middle Ages, for crying out loud, and we said, hey, that's awful when we had it back then. But it's the same thing. It was like France, when they had before the French Revolution, when they had this system set up where the elites were just like, and then you had the utter poverty of the poor. You had people like I don't know if Marie Antoinette actually said let them eat cake, but possibility she did. But it was that general feeling was there, where it was like We don't care about the poor people. We don't give a damn about them. Let them take care of themselves. Meanwhile, they're starving to death. And meanwhile, the rich fat cats are just profiting. Why does it have to be this way in the world? Why can't the wealth of the world, which is enormous, be shared among all? It should be. It shouldn't be the way it always ends up that way, where a small group is benefiting from everything that's good about the world, and the other larger group is suffering. Shouldn't be that way. But it is. But anyway, I don't know how I got into talking about that. All I'm saying here is look out. Because if you think you saw inflation, they've only slowed the inflation down incrementally. And now they've got to the point where they're going to have to shift on this and go back. Backstep on it. And you're going to see the inflation roar in. And that's what you're seeing on the front edge of silver here. Silver and gold are going up because they're finally going to start to break loose, I think, very soon now. Especially silver. Because it costs a lot to produce this stuff. And they just can't afford I mean, with the price of energy going up and everything, and the mines, oh my goodness, yesterday, guys, I looked at the latest data coming in. I've been preaching to you guys about ore, and I even did a show quite recently about ore grades for silver production, and I was saying it was in the 9s. Little did I know it's down into the 6s. I was giving it more credit. I was saying how bad it is. Oh, ore grades are dropping off. They used to get like almost 20 ounces out of a ton. And I was checking the numbers there yesterday. And I said, oh my gosh, I was wrong. I said the new numbers is like a 9 ounce. No, it's down to 6s. They're only getting about 6 point something. I think it's 6.8 or something like that on the average. Ounces per ton now of ore. When they first started mining these mines and they came in and the silver was really rich, the veins and the ore was really rich, they used to get almost triple that much out of every ton. They've dug all that out and they've processed it already, the good stuff. In other words, they've ate all the icing off the cake. All the low-hanging fruit's been picked. And now, with energy prices going up, they're going to be mining ore grades and so yeah, they're going to need more money. And if you don't give it to them, they're just going to close down that section of the mine. All the mines will do the same thing. If it's not profitable, they're just going to shut down sections of the mine. And then you're going to have a more constraint on supply, aren't you? And so eventually the price will have to rise. Otherwise, these places that manufacture things, they just ain't going to get the silver they need for manufacturing. Well, yeah, the world is slowing down a little bit in manufacturing. So they don't need quite as much silver as they needed before. But they're not going to get none unless they start to pay what they need to pay for it. Because we're not going to find, just like the silver grades are dropping off, ore grades are dropping off, ore grades are dropping off in not ore, it's not ore, actually what it is oil fields. They're getting deeper, they're having to go deeper and they're getting less for going deeper, less oil. Especially in places like the Permian Basin, down in West Texas where they get an awful lot of oil. They all the easy stuff. Now it's getting into harder stuff. It's still there. They still have a lot of oil there. But it's down deeper. Costs more per barrel. That initial cost per barrel. Basically what it amounts to is when they drag a barrel of oil out of the ground, how much oil does it cost to get that oil up and out? Does it cost a half a barrel of oil to get that 1 barrel up and out? That's a question mark, see? Anyway, so we're looking at $22.46 for silver today, up 28 cents. Gold, I mean, when they first started in those oil fields, Standard Oil and those companies were going in there and they were digging. They were called geysers. How they knew they hit oil was the oil would come flying up out of the pipe into the air and make a shower of oil coming down on all of them. And they call it a geyser. And we've hit oil. Remember it in the old movies and stuff, they still have that, where the guy's there and he's digging for oil and all of a sudden it just gushes up out of the ground, a geyser of oil, and they're all covered and soaked in oil. That's how it used to be when they first went there. That's how much oil, and it was under pressure down there. Well, they sucked all that out and dry in the end, and then they went down in with steam and stuff, and they've steamed off. That's called fracking. That's where they steam off what's left down in there, and basically it's like washing every last drop of oil up out of there. So what's left then? Well, that's a dry hole. Well, you got to go down even deeper. It costs more. That's where they're at now. If they want more wells, they got to go down deeper. Yeah, there's big pools of oil down there deeper, but it costs an awful lot more to get to it and get it up. I'm rambling a little bit, but it's looking at gold prices, $17.95. Crypto today, Bitcoin has cracked above the $17,000. It was a few minutes ago. It's right now at $16,958, but it was above $17,000 a few minutes ago. $1,268 for Ethereum today. So Bitcoin's doing a little bit better than it was. It picked up a little bit of a bid in that encouraging day they had in the market yesterday, because they can see now that the Fed is looking for a soft pivot. And the markets are reading that as dovish. Dow Jones Industrial Average is down 441 points on the day so far. 414 points down, I should say. At 34,174. Let's take a look at crude oil at 82.67. It's up $2.12. Take a look at the MOVE index today at 127.27. And we're going to take a look at bonds and rates today. And now this is the biggest mover today I see, is we see quite a substantial drop in yields today. We're looking at 10-year at 3.62. It's down 8 basis points. The U.S. 30-year is 3.74. It's down 7.8 basis points. U.S. Treasuries and the dollar index today, it was going down pretty sharply. It's at 105.1, but now it's leveled off just a little bit right now. We were losing on the dollar there. I think it was, what was it, 114 or something not long ago? Let me take a look back here just a little bit. We're going to look back 6 months. And yeah, it peaked I think it peaked around 114 here someplace, if I remember right. Yeah, there, 114.10. That's where it peaked. And it's been dropping off ever since. But I'll tell you guys what, if we go back a long way, it's quite a long way, you have to go back here. But you can see there's some pretty low lows in the dollar if we go back here. 72.67 right here, 2008. 72.67 on the dollar index. Now I'm going to tell you guys what the marker is. Now that you've seen that it can go really low. 72.67. The marker for the dollar would be a drop below 70 on the DXY here. That's when we're really going to start to lose steam and hope in the dollar. But you have to understand what it's being compared against. That's why it's so unlikely we're going to see that low. But we're still, even though we're seeing the dollar index float a little bit higher, like going up to 114, we're still seeing the purchasing power of the dollar dropping extremely quickly. You say, well, how can that be? How can the dollar index be going up really high like that at the same time the dollar's losing value? That doesn't make sense. Well, it does make sense if you consider they're only comparing the dollar against other crappy fiat currencies like itself, if not even worse than itself. Because the dollar has been pegged to oil. It's a loose peg. It's called the petrodollar. It was established in Kissinger back during the Nixon administration, when they did the Nixon shock. They established the petrodollar, and what it meant is the dollar they could only use dollars to purchase Saudi Arabian oil. They'd take nothing else. They'd only take dollars. So that means people had to buy dollars, and that made a loose peg to oil. That has been continuing to this day. It's still there, but it's being eroded. Very quickly it's being eroded by countries like Saudi Arabia themselves, by statements like from the administration against Saudi, saying that like anything, see, this deal that they signed with the Saudis requires America to basically use the power of their military to protect Saudis, but Saudi Arabia. But the thing is if America starts to have bad relations with Saudi Arabia, or they say something that causes bad relations with Saudi Arabia, they jeopardize this whole thing, this whole petrodollar thing. And this is the only thing that gives the dollar any power. So the dollar has power. This gives all the other fiat currencies power too, because they're all pegged to the dollar. The dollar goes down in flames, so do all these Western fiat currencies as well. It's called hyperinflation, folks. And because the petrodollar is being eroded from the inside out, it's almost like the way ice gets eroded. Sometimes you look at an iceberg or something and you don't realize it's being eroded because it's at the inside of the iceberg. It's melting away from the inside. So outside it looks good, looks solid. And then all of a sudden it goes crunch and the whole thing falls away. Kind of similar to puddles in the wintertime. When you get a sunny day, the ice stays on the top, but it melts out from the bottom, and then it crunches down, and it's done. And that's the way with the petrodollar. Like it just crunch all of a sudden, like. And then what do you got? Hyperinflation. Anyway, thank you guys for listening to my show. Like and subscribe. Remember, hit that notification icon so that you'll be notified when my show comes on the air. And we'll catch you guys in the very next episode. Have a great day. Bye-bye.